Traders at the UBA say they expect the primary market auction scheduled for today to shape activities at the treasury bills markets. Chuka Nwachukwu, head bonds trading at UBA, joins me to discuss this. Thank you so much excuse me, for taking the time out to join us today. Let's start with that NTB auction today. I'm not sure if the results are out, but if they are, what can you tell us?
Okay, thank you, Esther, and Happy New Year. The auction results are not out yet, but we didn't expect any much changes. We are looking at between 4.9, where it came out the last time, for the longer end, to 5 to 5.5 half at max. The shorter end came out at 2% levels, and then the mid 182 days came out at 3.3% levels. So we expect that this auction today will be within this range.
Now, speaking to an analyst earlier this morning, I mean, she was telling me that the treasury bills market especially has been quiet, it's been skeletal activities, because obviously investors are not too encouraged by the current rates. I mean, 4.9%, that's low. And I remember asking for how long that the government or the CBN can hold that rate at 4.9%. At what point are we going to see a firm resistance on the part of investors?
Okay, yeah, the rates have been pretty low, and that's why the market has been quiet. Expectations are still very high. I mean, all pointers are that the market will, the yield will go up. So, I mean, no investor will want to invest at this very low rate when they know that the expectation is that the yield will go up. Now, two things are things that we need to look out for. First of all, there's an MPC meeting between 25th and 26th of this month. So that will shaping the government CBN strategy for the year, and so that will give everybody insight into what they are looking to do, and then of course the inflation as well. And so all these are the pointer that the reason why a lot of people are waiting on the fence, and then you see activity on the low side.
Now, the fiscal authorities have a 17 trillion naira budget for this year, and over 6 trillion in a budget deficit. Obviously, there's going to be a lot of borrowing from the domestic market. Talk to us about, I mean, if you could look into your crystal ball, how do you see this impacting rates? How do you see rates moving this year with all that borrowing that's going to take place at the domestic market?
Absolutely right. So there's going to be a lot of borrowing, especially on the local side. Two things: one, pre-election year, and then secondly, the fact that it's become more expensive for government to borrow internationally. And so you see that that's one of the reasons why we see players waiting on the fence, because we know that invariably this rate will go up. And I mean, presently this yield level, like you rightly said before, is not attractive. And knowing fully well that government is going to borrow heavily, and then the budget deficit this year, we expect that yield will go up. I mean, we expect to see the longer end of the curve of the NTB to go as high as, say, between 7 to 11%. On the bond side, bond as well has also been quiet. The bond calendar is still being worked on. We're waiting for the calendar to be out anytime between this week and next week, and so that will shaping the activities on the bond side.
All right, Chuka, we just have 1 minute left. Just a quick your take on the U.S. Fed rate hike and how you see the CBN here responding in 10 seconds. What do you see happening?
Okay, well, fake has hiked rate, and then everybody expect that emerging markets will follow suit. But I don't think the CBN will toe that line yet. They probably will just wait out and see how the market reacts to what they will come up with in the next MPC meeting.